Here's a recap of the Australian retail sales trade from February 5th at 7:30 p.m. Eastern Standard Time. Let's take a look at the release data. Here at 7:30 p.m. February 5th, retail sales came in at a disappointing minus 0.5% miss from the forecasted number, and the previous was also revised down 1 percentage point, 0.1 to a negative 0.2. Real quick, I had somebody ask me how I seen that this was a negative 5, went from 3 to 2. This is a negative 0.2, so it takes 3 percentage points down to get to 0.0, and another 2 percentage points to get down to a negative 0.2. Minus 0.5 on the release. The revised trade plan that you had hopefully seen stated that if we had a minus 3 or a positive 3 or greater, that was the trigger in order to enter this trade on 3 fronts. And we'll talk about those 3 fronts. Let's take a quick look at the information about the retail sales. We're going to go ahead and click on this and grab some data. Not a Merry Christmas for battling Aussie retailers. Let's go a little bit further and let's take a look at the actual news release. And this is actually coming, this is a link that comes from Forex Factory. When the news comes out, if you click on that, more story. And it is very disappointing for the Australian retail, especially for Christmas. Blue Christmas for small retailers, eating out less. The entire report is very negative. So we would expect that information to help us in this trade, that the triggers were hit, and that the Australian dollar should weaken. So let's now go take a look at the charting, and we'll cover what happened. We're looking at the Australian US dollar chart, 1 minute chart. I have the hard right edge set up to be at 1 minute prior to the news release, which was a miss from the forecast by a negative 0.5%. The trigger was a 0.3. We definitely met that. And we looked at the news and we've seen that that was rather negative. Let's move this forward. I was actually on Skype with Huskins as this came up, and he was trading the spike. Didn't get a great fill on it. He got filled, and I think last night, Huskins, if I'm not correct, it was somewhere in this 78, low 80s, upper 70 range as it dropped down. So he was filled on the spike trade and had not stayed in it very long. So let's mark a line in that area. Let's go low. Let's say he got in at 78, because I don't recall exactly. And got out of it towards the tail end of the spike. So a 9, 10 pips on the spike. I then entered this on the scalp after this was released as per the trade plan. So if you had seen that trade plan, noted that when the trigger was met, there were 3 separate trades on this release if the trigger was met. The first one was the spike trade. The second one was a post-spike scalp trade where we would try to pick up 10 to 15 pips, maybe as many as 20 pips on the post-spike move. And then there is the continuation trade on the European Open if the trigger was met. And in this case, the trigger was met, so all 3 points of this particular trade plan became active. So let's move this forward. I got out with a 12 pip gain on this, and then got out at this area here as it dropped down, and it started to come back up if we come over. And I exited this trade and picked up my 12 pips. Had I stayed in it, took part of my profit, and then managed this trade to a break even, it was an amazing trade, because from that point it just continued to fall off. When we get to the 2 o'clock, I'm going to change this now to a 5 minute so we can move forward and not have to drag this out too long. Let's change this to a 5 minute and tighten up on this, and then go to the 2 o'clock and let's draw our line. our trend line to see if we were at a downward or an upward slope without even drawing the trend line is very obvious. If we picked the pre-release price, either if we picked it at the close at 1829 or the 1830 as the news was released and it began to drop down, and we draw our line down to the 2 o'clock open, and there's our line. It's definitely a downward sloping line, so the trade plan states that we would then sell it at this point. So we'll sell it here, and let's see how this trade works out. And it indeed does drop down. The news was very negative. Now, depending on how you manage this trade, if you were up all night, 2, 3, 4 o'clock in the morning if you're in the United States, or evening for you folks on the other side of the world, it was a pretty good trade. Picked up another 20 pips on this trade based on this. Again, how you manage this trade, the total available pips out of this was somewhere in the 70 to 80 range. If you had gotten in on the spike and then brought your stop to a break even and let it go. There's a webinar, by the way, next week that Huskins is having on smart stops and smart targets and how you would treat this trade using what he calls smart targets, and how you would take percentages of profit and continue to let the trade run as long as you could to be in a risk-free trade, bringing your stop to a break even at some points along the trade. So that's the results from the Australian USD. Hopefully you've enjoyed this. A little bit later I'll be producing the Canadian IV results, and you'll be able to have a look at that. Have a great day. We'll talk to you soon.